Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. We will continue to talk about the euro currency as usual and start also as usual from the daily time frame. Well, yesterday we said that probably market could start some retracement to the downside since it has hit some important targets on the daily time frame, and now you can see that this really has happened. Yesterday we said that probably we could enter short with the placing stops above these highs, since this was the wash and rinse on the hourly time frame. So also market has completed some regardless ABCDs patterns, and also this was some bearish signs and bearish wedge and etc. Well, now you can see that all these reversal patterns now transformed on the daily time frame is a nice bearish engulfing pattern. Somebody of you guys asking me on the forum that maybe this is the wash and rinse, maybe this is the railroad track. This is neither wash and rinse nor wash and rinse nor a railroad track, because wash and rinse assumes that we should clear out and hitting some previous extremes and then fast return back. Now you can see that just very near to the left side on the chart you see that greater highs. So this is not the wash and rinse. Also, this is not the railroad track, because railroad track is the pattern that also calls as a rejection of price. The nature of the railroad track in rejection of some price level, and this price level should be extreme for the current market. With extreme we should understand the price that was not on the market, wasn't be on the market for the long time period. As you can see, it's just about a month ago we see the same level that was currently. Okay, so that is not the rejection of price. This is just a respect of weekly pivot resistance, completing of some targets. Okay, and this is just a bearish engulfing. Still, the theory tells that the target of this pattern is the length of the bars. It also, as with the railroad track pattern, the bearish engulfing, also the minimum target of this pattern is the length of the bars, and we can see that this is approximately the 618 support area. From that swing up from this low to that high, that is also the weekly pivot support one. This is around 141 area. So if market will accelerate to the downside, then the potential target of this move is 141. Also, you will see the amazing harmony between this pattern and the pattern that we see on the 4-hour time frame. Potentially this could be the head and shoulders pattern that will point on the same target. But in the middle of this area, in this range, there is some trap for the public, and now we will discuss it. On 4-hour time frame, you'll see that we said yesterday that probably the bearish wedge that we have discussed could transform to could shift to the head and shoulders pattern. Now you can see that this probably will happen, because head stands right at the 1618 extension of that swing down of the left shoulder. This is very typical ratio for the head and shoulders patterns. Now we can see that somewhere near market stands near some point of the neckline, so probably market will hit some area and then will show some retracement to the upside. Okay, well, probably this will be somewhere around this area, because this is the confluence support. For our confluence support 142.67, 143.13. Also you can see that here previous highs stands, weekly pivot point 142.49, and another confluence support 142.45, 142.67. So this is rather strong area of support, and probably market will show retracement from that area to the upside. Let's assume that market will show this pattern A, B, or B will be a bit later if market will reach some lower levels, and retracement to the 618 resistance from that swing. as with the head and shoulders pattern. Then we can see ABCD pattern that will be formed by the head and the right shoulder of the potential head and shoulders pattern. In this case, we see that market creates the two agreements. First agreement with this confluence support 141.89, 142.45 and 100% extension 142.02. This is the first area of agreement, okay, from that ABCD pattern, okay. And the second agreement right here with the target as on the daily time frame, weekly pivot support 140.80. This is the 618 support from the whole swing to the upside, and 1618 target 140.77 from that ABCD pattern. Very common with for the head and shoulders pattern that the target of this pattern, classical target, is the length between the head and the neckline that we should count to the downside. This will appoint the same level, this classical target. The Fibonacci approach to the estimation of the target head and shoulders is the 1618 extension from the ABCD pattern that is formed by head and the right shoulder. Very often they point on the same level. It's around 141. And that is the trap for the public, because we can see that this is Fibonacci confluence support and 100% target from that ABCD. This is confluence support and agreement. Also, this is the previous high somewhere around that area. Well, very often head and shoulders pattern could fail, and Judd Napoli has the directional pattern that's called the head and shoulders failure. How this happens usually? Market break the neckline to the downside. Then it reaches some strong area of support. That is our area of confluence support and agreement. It consolidates for some time and returns fast back above the neckline. That is trap public in the wrong position, because they entered during the breakout of the neckline to the downside. When this happened, then their stops will be triggered and market accelerates to the upside. This really could happen. So be careful and be aware of that area. That's why it's better to enter short near the establishment of the right shoulder. In that case, if you enter on the retracement to that area, you could place first tightest stop, it's right here, okay, and then during the breakout and failing of the head and shoulders, you will not be trapped in the wrong position, in the loss position, because in this case you can lose some profit, but still we will have the profit position. You can close your position with the profit if this head and shoulders pattern will fail. If it will not, if it will accelerate to the downside, well, in this case it will be much better, so you will get more profit. So that's been said. Currently we should keep an eye on the forming of that head and shoulders pattern. Particularly, we should drop our time frame to the 15-minute chart, to the 5-minute chart, and watch for some ABCDs to this area around 144, 618 resistance from that potential swing down. Search for the sell signals in that area to establish short position with that pattern. If you still haven't any short positions currently, if you miss entering right here where we had discussed yesterday in this point, okay. After that, watch for clear of the breakout of the potential neckline, and particularly that area around 142, because here the head and shoulders pattern could fail and market could return above the neckline. This could really happen. If not, then the potential target of this head and shoulders pattern is right here, 141. That's our trading plan for the nearest couple trading session, maybe for the beginning of the next week. Also keep in mind that tomorrow we will see the release of the important data on the gross domestic product for the second quarter. This could be really important data that could shake the market a bit. Also, tomorrow is the last day for the establishing of the new debt ceiling for the United States. So tomorrow could be really a crucial day for the market, not only for Forex market but also for the other markets. So keep your risk reasonable, be careful, and first watch for that area to establish short positions for some ABCDs. Maybe this will be the butterfly sell patterns right here or something. And then be careful of the failing of the head and shoulders around 142. The ultimate target of this pattern is 141.